Hello, 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 hello. Let me see if we are live. Test. Yes, we are loud and clear. We are on air in the community, which is all good. So I'll wait for a few more minutes for people to come in and log in properly. In the meantime, let me just see if we are streaming on the outside because today we are doing that as well. Hopefully that's all coming through okay. For those of you who are watching this for the first time, my name is Phil and I'll be your presenter today. Hopefully this is all coming through okay. This is a little bit about myself. If you're looking for a community, check out TraderCast. If you're looking for the education, you can check out mytradingskills.com. You'll find some of my training courses there, actually all of them. And most of them are free. So check them out, see if you like how we teach, and let me know if you need help with anything else. Over the past 10 years, I had the privilege of speaking in front of various different industry events, and I've taught many people how to trade. Now, what I'm doing here today is basically a practical application, hands-on, real-time application of stuff that we teach in some of our courses, and this is what I firmly believe a novice trader should be able to do. So there's no complicated indicators here, no complicated trading strategies. It's very simple: trend following, price action, trading, and these are my opinions and experiences only, since I'll be talking to you about some live trades or maybe tradable levels, or I might even be placing a live trade in front of you during these sessions. Today maybe not so much because we're waiting for the FOMC later on, but normally we are talking about live trades and so on. So this is what's been open yesterday and closed. So for those of you who watched yesterday's session, you knew I was long US crude from so I'm just looking at crude now as well. Gold. Just looking at that now. I'll talk to you about that. I have a couple of open positions, so I have a long gold and long crude. But I was long US crude at 118.36. I've closed half in front of the audience during the session yesterday, and then I moved my stop loss higher, initially at 119 and then moved it higher again. So when the reversal started happening, I got picked up at 119.50 and I got out of that trade. So happy with that trade. That was a good trade. You also saw me with the long gold setup. It was 1820.50, 1820.70 or thereabout. So let's call it 1821. And I got stopped out of that trade at 1814 halves. This is a second losing gold position. I had one yesterday as well, so I had two losing positions, but I'm long again from 1808.50, 1808 halves. And I'm also long crude from 115, 115. And I'll show you those two setups in a bit. There we go. Sorry, I just have an open position in crude, and it's actually pulling back a bit, and I have my stop at the break.
Some commentary from the Kremlin following the meeting discussion between Putin and Xi. They say they discussed economic and trade cooperation.
Now let me just show you that setup straight away. So this was the crude oil that I was talking about. I might be picked up while I'm presenting this to you straight away, but crude oil in my book is uptrending, although we have a corrective pullback. And the way I'm seeing this at the moment, I'm seeing this yet again. If you watched some of the previous sessions, I like this type of patterns. These are continuation patterns as I see them, which are trading in a direction of the prevailing trend. So quite often you see a pullbacks to rising support trend line, and then you see a breakout higher. So normally something like this happens, a rally from here and then a little retest from above like that, and then we see another leg higher, and so on. So in my book this is bullish, so I've decided to go long at 115. Now what you're seeing here on this chart, you're seeing it 117. So the prices are different because different brokers could offer you a different contract to trade. For those of you who trade crude oil, you know crude oil is traded in futures contracts, and different monthly expiries will have different price, or different brokers will give you the ability to trade oil at a different price as well. So that's where I am with crude oil. I'm currently long from 115. I saw this as a retest of this bottom here, so that was the low, and then again low, and again. So educated opportunity for me to get in. Now my stop was initially lower than 115. It was at 114, so I was risking about 100 points on this trade, and now this is at break even. So let me just show you where I am with this trade, and then we can talk about some of the other stuff, because this is actually quite volatile lately. So you can see where the entry is at 115. So the chart would look the same as probably the one that you saw me doing the analysis on, or maybe your broker could possibly provide with, but the price is different. The price is different because you get a different contract, different market to trade, I suppose. But anyway, so I got in. My stop was initially below, and what I did is I moved my stop initially from down here. It was 114, then slightly higher, and then when we saw this breakout, I moved it at break even. And now what I'm going to do is I'm going to lock in about 16 points on this trade. So I'm going to put my stop loss at 115.16, so just to be on a safe side. From the trend point of view, I would like to see a push and a break above these swing highs at 116.30 on this particular chart, and then I would expect to see an additional move higher. So this is currently in the profit. If the sell-off happens or something triggers corrective pullback while I'm talking to you, then at least I'll be able to walk away with some money. I'll see if I see a breakout above here. I might be looking for a partial take profit. And then moving the stop loss even higher in that case. But at the moment I'm keeping this position open as it is. This is the running P&L. I have 10 contracts on this trade, so it's a sizable contract. Ignore this risk to reward ratio, because my reward was just provisional there. It was just based on, look, it's up here. I said just in a case if you see a spike you want to keep it there, but really take profit would be around here, 121. That'll be a decent take profit level. Only the breakout and daily close above 121 could trigger extension to the upside, potentially targeting higher prices. But we'll talk about what's happening in US and what Biden said yesterday, which caused a bit of volatility in crude oil. It was to do with the excessive profits, as he called it, for the energy companies as well. Before I move on to anything else, I do want to talk to you about the other open position that I have, which is gold. You saw me trade yesterday, that. Okay. This is all streaming. It's all good. So I'm going to say hi all. Welcome. So where am I now? The other position that I wanted to show you is gold, and that's a profitable trade for me at the moment as well. You saw me buy gold on a number of occasions yesterday, and then eventually we saw a dip lower and a loss of this rising trend line here. That's the trend line that I was looking at. And then eventually we're seeing a bit of a bounce back. Now I'll delete some of this stuff that we have here from the annotations point of view, because you can't really see the price, and the whole idea is that the price is the most important. So from the breakout point of view, this was a really clear indication that bulls are in charge. So you have 1, 2, 3 red candles. You have 1, 2, 3, 4, 5 red candles here, followed by pause here 2, and then 1, 2, 3. So 5 and 3 fib numbers, nice retracement. It came slightly lower below this trend line, and then we pushed higher. So from the pattern point of view, this is the Morningstar reversal, and if you don't know what that is, feel free. There is a candlestick course. I'm pretty sure you can find loads of candlestick courses everywhere. There is one on My Trading Skills which is completely free. Check it out, and it talks about this particular pattern and how to use it, how to recognize it, how to trade it, and so on. So where to from now? Well, obviously we are looking at this area here as a resistance.
Someone from ECB Centino says ECB decision not about change in trajectory.
That's a resistance. We could see a bit of a pause there because at the moment markets are awaiting Federal Reserve a little bit later, in about approximately 4.5 hours or 5 hours, depending where you are in the world and what time zone you're in. That could trigger a volatility here in gold, and if we see divergence from the expected rate hike, that could cause a US dollar to become quite volatile. It might weaken against some of the other currencies which appear to be oversold against the US dollar. If they surprise us with bigger rate hike than what market is expecting, I wouldn't be surprised to see gold lower. So that's where I am with gold at the moment. I would be paying attention to this rising trend line from the intraday point of view. Would I be buying gold right now at this point in time? Probably not. I would quite likely take some partial profits actually here, because I'm looking at this as an indecision, and this is the 15-minute chart. This potentially could turn into a double top. So let me just show you where I am with gold at the moment, and then I'll take some money off the table, and then we can reassess everything going forward. So that's where I am with gold. It's the same thing with US equities as well. Everything is in anticipation of Fed tonight. So that's where I am with the gold. You can see I'm long from 1808. My stop loss was initially lower, moved higher, now at break even. There is a reason for this consolidation here. which we saw based on that hourly time frame. So let me just show you that hourly time frame. You're seeing, here we go, 1 2 3 4 5, pause, 1 2 3 4 5 6 7 8, 3 and 8 again, then previous swing high, and look at this candle here. There is a big spinning top here, indecision, and so on. So what I like to do at the moment is I will take some partial profit. So what I'm going to do is I'm going to close half of my position. So I'm going to close, let's say,
we are just seeing some
10,
comments from Panetta, but for now he's commenting on the digital euro.
I'll see if there is any more scope for the upside. So I'll pay myself a little bit, and then what I'll do is I will move my stop above the entry at the cluster of these lows, and I'll lock in another 4.5, let's say 5 points. So 5.5 points, 5.5 points on this trade. So if we are seeing correction, a severe pullback or something, I will likely react to this and get out of this trade around here if I can. That would be my mental stop loss around 18,
there is a speech
20.
from Panetta commenting on the digital euro. We will put it on the board.
If I'm busy, if I'm away from the screen, or if I'm talking while something happens, at least I have something in place here which will protect me from losing all unrealized gains on this particular trade. But that's my gold, and hopefully I had two losing trades, or two or three losing trades from gold, one after another, and eventually we got this one that works. So we want to make up for all the losses we made on previous trades and make a little bit more. That is appropriate risk management strategy. Okay, cool. Sorry guys, just having a sip of coffee, and hopefully I'm back on. Excellent. Now, the other thing that we can talk about very quickly, this is Dow Jones, this is euro dollar, this is cable sterling dollar, this is dollar yen, and this is our gold trade here as well. So plenty of levels which could be triggered. So you have resistance here, this is still intact. So this type of scenario for cable, rally for a sell-off, same thing, rally for a sell-off, a rally and a breakout above here on dollar yen.
ECB's not, says the ECB said it would act if there were transmission risks.
And then there is a buying opportunity down here,
and not there saying the PPP reinvestments are ECB's first line of defense. Not says we have asked committee to work in slightly accelerated fashion in case of PPP flexibility isn't enough.
Okay, we would normally start with the top 5 things we should know before we start trading today. And there is a couple of things here. US index futures are rallied along with treasuries as policymakers.
So they're not just saying the ECB is ready to act if PPP reinvestment's insufficient.
See, what they're saying is actually causing euro sterling to push lower. It's bullish against sterling. Euro is bullish against sterling, but now we're seeing a little bit of a pause because I think market is forecasting more hawkish ECB going forward. But here we go. US indices or index futures rallied along with treasuries as policymakers on both sides of the Atlantic grapple with soaring inflation, slowing economic growth, and volatile markets. Now, loads of people talking about Bitcoin, and that Bitcoin actually dipped down to about 20,000. This is actually catching my eye. Turkey rejects NATO offer of trilateral talks with Sweden and Finland. That's the one to watch as well. I don't think that'll trigger another geopolitical event, but tension, yes. So that could cause markets to react a bit. And also, according to Kremlin in Russia, Putin and Xi discussed economic trade cooperation. Putin and Xi discussed military and technical ties as well. I don't know if you missed this one as well, but there was a news that Chavez in Nicaragua agreed to accept Russian military presence in Nicaragua for humanitarian purposes, which could include planes, boats, and military equipment being offloaded on the territory of Nicaragua. Wow. And then Kremlin kind of very quickly said, you know, it's not aggression towards anybody. This has been going on for a very long time, and the kind of negotiations and the agreements in place. But it's a timely statement, if I might say so. Okay. Now, the other thing that we should be talking about is top 5 things we should know before we start trading. And the first one is it's all about the Fed. Traders have fully placed in 75 basis point increase from Federal Reserve today.
So we see Italian bonds extending gains, 10-year yield down 42 basis points to 3.76%.
Market participants are keen to know whether Chair Jerome Powell and his colleagues will rise the benchmark by similar amount next month. Treasuries seem calm after the volatile few days, but that may be just the lull before another storm, according to Bloomberg report. Meanwhile, Double Line Capital Chief Executive Officer Jeffrey Gunglich said the Fed funds target rate should be forecasted to 3% from 1% now. We're also seeing a European Central Bank meeting. This is emergency meeting. Nothing screams crisis more than an emergency meeting for a major central bank, and in this case this is European Central Bank. The Governing Council are holding a conference this morning to discuss current market conditions. According to the report, the worry for policymakers is that very rapid repricing of euro area financial assets since last week's scheduled meeting, which prompted a rate hike in July. This is causing unjustified widening of borrowing costs. Okay, well, look, they did say they were worried about inflation, and Christine Lagarde was speaking, and markets are pricing in a hike, so that's it. Today's meeting is an attempt to address the so-called fragmentation risk. The email, or this email, was written before the results of the meeting were announced, so just keep an eye on Italy's FTSE MIB and also 10-year Treasury yield to see if it's enough to temper the recent blowout in spreads, according to Bloomberg again. Markets fallout. Italian bonds and euro rallied on speculation policymakers would give further details on how they're planning to keep borrowing costs in the region, in the region's most valuable members in check. European stocks also higher. Italy is outperforming. S&P 500 contracts were up. in New York ahead of Fed's meeting. Treasury yields drop and US dollar reverse from 2-year high. The most important thing that everybody was talking about is Bitcoin. Bitcoin prices tumbled once again, driving the token to the brink of 20,000 on evidence of deepening stress within the crypto industry. The largest cryptocurrencies sunk 8% to 20,180, the lowest level since December 2020. Bitcoin has fallen 9 days straight, the longest losing streak since 2014. Losses continue to be widespread, with Ethereum plunging 10% to $1,062. And that's it. That's it. Now, so let me see, where are we now with the crypto? Now gold is pulling back, guys. Gold is pulling back, 1827. So I'm happy with taking that partial profit here. Happy with my decision to take partial profit. Look, you can see there's a rally indecision here with the spinning top and now pulling back. So I could be looking to get out of this trade sooner than thought. Let me see, where am I now with my gold? It's still nowhere near the stop, but I don't like this formation. So this formation, if completes as it is, or if this candle, this is the hourly candle, finishes at least half of the size of this previous green candle, would trigger something that's referred to as a evening star reversal. Evening star reversal is normally considered to be indicative of profit taking at the top, or maybe short sellers entering the market at some major resistance area. So here we go, previous lows, previous high, previous high. So it was support before, support, loss of support, resistance, and resistance, and now it's resistance again. So let's see how this plays out. I'm looking at this area down here, 1819, 1820. If the price keeps on falling, I will likely get out of this position. I wouldn't wait for this to be picked up. But so far, stop is above entry, partial profits taken. Keeping an eye on it, and just paying attention to what's happening, because I don't necessarily want to lose all unrealized gains. The same thing with crude oil as well. The crude oil, we are at the open, so US markets are open at the moment.
So the S&P 500 opens up 1.1% and the Nasdaq 100 rises 1.4%. Don't like this really that much. Look, there's my stop is above, so I might be triggered. Here. It'll be triggered with the profit, but it's nowhere near up here where it was quite nice and profitable. But it was a good area to buy. 115 was a good level. I'm happy. Stop is in the right place. It's above the entry. Let's see how this plays out. I'll let you know if I'm stopped out. Oh, there we go. I'm out. While I was talking to you, while I was talking to you, I got picked out, and that's closed now. So look, there's nothing open here. In crude oil. All of this is actually
turning into something bearish now, because then you have a sideways consolidation at the lows. So I'll pay attention to that. Will I be shorting oil below? I don't know. I don't think so, but anyway. So I'll just update the history. Crude oil about 16.5 points, 115.16.5 or something. Okay. So what I'll do is, let me just do that. So crude closed. I'm going to do stop loss at 115.16. It was 16.5, but anyway, call it 16. So 16 points, 16 points in profit. It was a more profitable position earlier. I really thought we could see a breakout higher, but that's closed. I'm out of it. This gold is also closed. I'll just update that. Gold. Okay, so closed. I'll say 1/3 of the position at 1830 halves. So let's call it 1830. Okay, I'll be pedantic and put the half. So 1/3 is closed, and then stop is moved higher as well. So that's where we are with the current positions. I'll update you if anything else changes. I'm looking at this crude oil now, and look what's happening. Picked me up. Look at this buying. Look at this. So now I'm feeling that I should have left my stop loss where it is, and look, it's gonna go higher now, and I'm probably not the only person feeling like that. The other people who kind of did the same thing, they're now, the fear of missing out is kicking in. So normally, rush in again and trade again, and then what happens? It reverses and picks your stop. So I'm not touching it until it comes to my level. I want to trade again around here at 115. This is 117 on this chart. So that's where I am with crude oil at the moment. But it's annoying, I have to admit. It is annoying. Is there anything else you need covered, guys, before we with crude oil at okay. Let me just see quickly where we are with this. Oh, quite a few people in. Yeah, good. Okay. There's something else that I was looking at as well, from the indices point of view. Now, if you go and check this out, there is selling pressure here, clearly defined downtrend. 4 hourly, also clearly defined downtrend. And look, now we're seeing a bit of a bounce back and the reversal. and all of this area here was a support zone, if you remember yesterday. So the price overshoot to the downside. And if you remember, I was looking at this inverse head and shoulder pattern here, and that was in a shorter term intraday, but instead what happened is price attempted to go higher and then failed. So now maybe this is forming a larger shoulder here, a larger head. Something like this, and then another shoulder here, or a breakout above here. So something like that could be in play. Key trading level for me would be at the cluster of these previous highs, or the neckline at 30,800, major support at 30,300 to the downside. If we see a breakout, then potentially we could see a short squeeze and a push higher towards 31,380, 31,700. So it could be almost 1,000 points on the upside for about 300 points of risk, 250, 300 points of risk. That's a good risk-reward ratio. It's a counter trend. I don't have anything open, but that would be kind of a contrarian view for today. So just in the case if Federal Reserve surprises the market with a smaller cut than anticipated, hike than anticipated, or possibly in the press conference.
Financial Times reporting here that Macron, Scholz and Draghi said to be planning a trip to Ukraine. Yeah, or in the press conference they might say something that might lead market participants to believe that they might not be as hawkish as everybody anticipated, and that could create a bit of a volatility across US equities. So what do I have here? I don't have anything open at the moment in indices. There's gold. Come on, gold. You want to push higher? Come on, gold. Come on, gold. This is actually quite nice. Really, really is. So let me just move it in the middle of the screen so you can see it. Look, bullish reversal here, number of touches, bullish engulfing here, number of touches, Morningstar reversal, push higher, profit taking, and now if this candle finishes as it is, that'll be a hammer, or a bullish hammer. So support, 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 support. Is this support? Possibly, yeah. But if it finishes, it needs to complete. If it completes, then that could possibly trigger more buying interest for another leg higher. So breakout, retest, and then off we go higher. So that's the basic premise here. That's a basic premise for gold, and I'm sticking to it. I'm leaving my position open. I'm seeing Nasdaq pushing higher at the open, S&P pushing higher at the open as well. Dow is thinking about it, but yeah, these two are front running it.
The other thing that we can talk about briefly are currencies, because they could become volatile as well. So this is euro dollar. Downtrending, severe selling pressure. Now we are holding here. If you remember, I was talking about that emergency ECB meeting. So you can see there's a reaction to that. That's a resistance. Support to the downside is down here. So if we see a continuous selling pressure, loss of these lows, the next level of interest is at 103, 103.80, 103.50, down that way. Only a push higher and a breakout above 104.80 could trigger some buying interest, and then potentially we could see a squeeze towards 105.50, 106.40, and then 107 to the upside. That will be a counter trend oversold bounce higher, but so far this appears to be consolidation ahead of FOMC. This is euro dollar, so here we go. So something like that, breakout, retest, and another leg higher. Euro dollar, I wouldn't really have anything open ahead of the news. Cable, nothing really changed with sterling dollar. The same levels apply. So only a push higher and a breakout above 122.20. A daily close above that level could open the way for a spike higher towards 123.60, almost 125, which would be a retest of this previous support line as a resistance. So it will be push higher in here, and then another leg lower. From the trend point of view, this is a clearly defined downtrend. And there was that news about Bank of England. According to CNBC, here we go. So this was the news that came out. Bank of England set for the 5th straight rate hike growth as the pound wobbles. Bank of England is set for a 5th straight rate hike as growth and the pound wobble. The Bank of England is expected to hike interest rates for the 5th consecutive monetary policy meeting on Thursday. At its meeting in May, the Bank of England raised its base rate by 25 basis points to 1%, its highest level for 13 years, but warned about the British economy risks falling into recession. UK inflation soared to 40-year high, 9% annually in April as food and energy prices spiraled and the country faces a major cost of living crisis. The Bank of England is expected to hike interest rates for its fifth consecutive monetary policy, consecutive monetary policy meeting on Thursday, as it looks to rein in soaring inflation against the backdrop of slowing growth and deteriorating currency. And that should really cause sterling to strengthen a bit, but this is sterling dollar, so if you have Federal Reserve surprise hike tonight, then we will need to wait how the markets might react to the Bank of England next week. But that's where we are. That's where we are with sterling dollar.
Comments here from the UK. They say the EU continues to insist unwilling to change protocol.
Might post this in a community a little bit later with some levels. Gold pulling back a bit now. Still in that trade. Crude oil. There is that reversal. So sucking in people to go long, and now look. Let's see what happens here. I might be looking to re-enter if I get a good signal. And I will probably stay flat until tonight's Fed decision, and then I'll reassess everything and decide if I can trade anything. But that's where I am. Just realized the time as well. I can see there's no questions. So it was lovely talking to you all. Thank you all very much for watching and listening. I will stop the broadcast now, and I'll be back with you tomorrow, again at the usual time, 2 o'clock UK time. So in the meantime, stay safe, happy trading, and bye for now. Thank you for watching. Thanks.
We're under 10 minutes now to the top of the hour. When we get some US data, we get NAHB Housing Market Index for June. We're looking for 67 on a prior 69. We'll also get US business inventories for the month of April, looking for 1.2% on a prior 2%.